Okie dokie. Let's see where we are. We're going to look at, I think everybody probably knows how to do the rest of this, but we're going to go ahead and look at it anyway. Then we're going to talk a little bit about reversing entries even though. Okay, what you do then is just like we did in chapter 6, right? You just journalize your adjusting entries and post them to the general ledger account. All right, and then because we've got to get them in our journal so that they're a permanent part of our records. All right. All right, then here's sort of a. Well, this is pretty good. I don't know if your book is or not. You use your book.
I'm using the study guide if you need it.
Oh, are you? Okay. All right. So you've got your inventory, first adjustments are to adjust your inventory, then your expenses, accrued expenses, prepaid, accrued interest. So those are the kind of adjusting entries you had to make. That's just a summary of them. Then we got to close everything out, don't we? So we close out all our temporary accounts. Again, that's all of them that have to do with all your expense accounts, all your revenue accounts, and your cost of goods. So the cost of goods sold have to be, temporary accounts have to be closed out, your expense accounts have to be closed out, and your drawing accounts. So it's basically the same 4 steps in your closing. You've got to close them all out. They would have 0 balances. First, we close out our revenue, which is just like we did in chapter 6. Close your revenue and your cost of goods sold accounts with credit balances to the income summary. So, all your temporary accounts that have credit balances are closed first. Okay. And your credit balances, well, we'll look at it in a minute. We'll go one by one. Then you close your expense accounts and any of your cost of goods sold accounts that have debit balances, which is going to be like your purchases account. Then the income summary would be closed next, just like always, just like you did in chapter 6. And then drawing account is closed to the owner's capital. So, here's the first one, and anything that's a temporary account with a credit balance, which includes your sales account, interest income, and miscellaneous income, and your purchase returns and allowances and purchase discounts, because they are cost of goods sold accounts that have a credit balance. Debit balance. No, they have a credit balance. Purchases, returns, and allowances.
I'm sorry. You're correct. You're correct.
Okay. Yeah, but you have to debit it to close it. Yeah.
I was just looking at the thing.
The debit, yeah. You have to debit on to close, right?
Yeah,
right.
yeah, I know. I don't know where I was.
Okay. Then once you get those, you debit all those, and then you credit your income summary. That puts everything in income summary on the credit side. Then we
Then we do our debit and credit.
yeah, then we're going to do everything that has a debit balance. What? It's not going to be good. Okay. Go back. Okay. So now you're going to credit each account except the income summary for the balances and the debit income summary for the total of all your cost of goods sold accounts that had a debit balance, which would be things like your sales returns and allowances, your purchases is going to be over it, which anyway, you do your total of all your debits first, all your expenses, plus any of your cost of goods sold that has a debit balance. And that total debit is what's put in the income summary. Then you go to each one of your temporary accounts and credit each one so that they're zeroed out. Okay. Same process. The only thing we're adding in our group is the cost of goods sold account. Okay. Then the income summary, whatever's the balance is in the income summary is what we're going to put in our capital account. So we've done, remember we still have in there our adjusting entry for our inventory. So those are going to still be in there. Then we determine the balance. In this case, we have a credit balance of $50,955.80, means we had a net income. And to close out the income summary, then we're going to debit it for the amount in it so that it zeroes it out. And then we're going to credit capital, meaning we're moving the net income into our capital account. Alrighty. There we go. Alright. Then the last thing we do is close out our drawing account. Alright. And the drawing is going to be a debit to your capital because that's what he took out. So we debit the capital account for the amount of the drawing and credit his drawing account. So now everything is in our terminal. Right? Then we've got all the journal entries there. We post those to our ledger accounts so that we're sure all of our temporary accounts should have a zero balance now. And be sure we enter the word closing in the description so that we can recognize very quickly that we have closed them out. Then the last thing we do, just like we did when we did chapter 6, is to prepare our post-closing, which means now we should show everything except temporary accounts. The only thing that will have balances will be your permanent accounts or balance sheet accounts. Okay. Alright. And post-closing trial balance that you prepare should look just like your balance sheet that you prepare. So, that way, but what we've done is we've verified, when we prepare that post-closing, we're verifying the fact that the ledger accounts are showing zero balances for the temporary account. Alrighty. And they do not appear because we have closed them out. They should be ready for the next accounting period with zero balances. Okay. So there's our post-closing trial balance. All our accounts, everything that has a balance should be listed. Alright, reversing entries. We're going to talk just a little bit about reversing entries. When we went in, we made some adjusting entries that had to be made at the end of the year to be sure that we recorded all expenses. Mainly, that's going to be your salaries, your payroll. And the reason we reverse those, we do those at the end of the year so that we're sure we have that expense included in our statements for the end of the year. However, to avoid human error, because when you get into January, let's say, and we get ready to do our payroll entries, it's real easy to forget that we've already done that 1 week in December. Because we're so used to it being close to being the same thing, debit, salaries, expense for the total amount. So to avoid that error, we go ahead and reverse that entry out so that our accounts don't reflect that end of the year adjustment. So all we do is we go in and take out any of them that we think, you don't have to, if you feel like, if your accounting is going to remember that they already did part of it. But what you're doing is you're sitting there with those entries of your salaries payable for that 1 week and your salaries expenses. It's real easy for an error to be made. The only reason you do reversing is to avoid an error. And a lot of companies don't even do that. But I mentioned it because it's just something that can help eliminate errors. We've completed our accounting cycle again.
So how would that affect you?
If you forgot, okay, you didn't.
If you make the adjustment, like put your salaries payable back in there and all that good stuff, of course they'll come out when you write the checks, right?
Right. Here's what happens. If you go ahead and reverse it, then you just do your payroll as usual.
Right, and then it comes off when you write your checks, right?
Right.
When you do your entries, right? Okay, I thought of it. Thanks.
Yeah. Okay. All right. Okay. And again, this is just Yeah, what it does is, if you didn't reverse it, it's really easy to forget. What you're reversing is just not you're not reversing the, you're reversing the salaries payable amount for when you paid it, you're reversing that one out. Because if you don't, you would be double expensing. What would amount to is you're taking expense in the next year that you should not be taking. That's what it amounts to. That's what would happen. Not like it's the end of the earth or anything, but it could be a big number if the company was big and had a big payroll. Okay, so here's what we're going to do. Your book back, so I'm just going to make an assignment. We are going to come in on Monday. I think I have everything open. If not, I'm going to open all the 10 through 13 online exams should be open for you to take. All right. And I'm going to check again to be sure, but I think they're all open.
Are you open again?
No.
They're open.
And they're 12 for sure, yes.
10 through 12, I'll open 13. I think 13 might be the only one that wasn't open. So 13 will be open, so you can complete all those. We're going to... Yeah, 10 and 11 should already be done.
12 and 13's open.
We do 13, right. Right, 12 and 13. I opened it
Yeah, you got them open.
now. And then 13 should be... If it's not open, I'll check to be sure, but I think I have it scheduled to open today. But, I will be sure that it's open.
They're open.
They're open? Okay, okay.
Is it okay?
Yeah, get the book. I'm sorry. Well, actually, I need to look at one thing before you go there. All right. So, here's what we're going to do. Monday, I'm going to give you an assignment for Monday. This assignment that you do on Monday is part of your exam. So you will do this and turn it in on Monday, and it's part of your chapter 10 through 13 exam. We'll answer any questions on it on Monday that you may have over in that chapter or 13 or whatever. You're going to do critical thinking 13.1. What page is it on?
475.
On page 475. Basically the same thing. Kind of the same thing you did. Okay. So you're going to be doing that because this is important. These classified statements are important that you understand, and I want to be sure you know how to do all your adjustments. So this part will be the production part of your exam. In other words, the paper, that part. When we meet, that'll be due Monday, and we probably won't stay very long on Monday. We'll stay as long as y'all need to. We'll talk about it and see if there's any questions. Then on Wednesday, you will be taking your chapter 10 through 13 in-class exam. It will be on paper, but it will be multiple choice.
That's good.
That part of it, okay? So what you're turning in on Monday is going to be the part, the production part, where you did the problem part. And then on Wednesday, we'll do the multiple choice part. Okay? And it'll cover 10 through 13. So I would strongly recommend that you go to the textbook site and do those practice exams they have on there for you to do for those chapters.
Show us how to get to
You can do those and then have it graded for you, and it'll tell you which ones you missed and what to go study. Okay?
True and false in here that I was trying to do there.
Oh, you found some? Yeah. Good study tool. Really good. You may see some of the same questions, so I would, if you want to use that as a study tool, that's a good one. Okay?
This is
All right? So it's,
Will this and the online exams be our finals, or will we have a finals week?
You have a final online.
Okay, so we won't be coming to class for a finals week.
No.
Okay.
You will not come to class for a final, right. Your final will be online.